Welcome, dear traders, it's me, Kate Stichin, and you are watching a recap of the Asian session. Goldman Sachs revealed a downbeat earnings report, while Bank of America shares climbed. Stocks of several big banks stumbled as their profit results were below market expectations. Wall Street closed on Tuesday almost at the opening levels, and trading in the Asia-Pacific region also started rather sluggishly. Asian stock indexes took a nosedive following a drop in European and American ones yesterday. They are unable to rise due to a lack of drivers. Investors analyzed the latest earnings reports of American companies, and they were more or less content with the quarterly profit results of the top US banks. Pessimism in Asia is fueled by geopolitical concerns. Tensions between the United States and China over Taiwan are mounting. China considers Taiwan a wayward province under its rule, but the US keeps provoking China over this issue. As fears of a new banking crisis have eased, traders are now focused on monetary policy expectations. Apart from that, speculators are also looking forward to the speeches of Fed policymakers. Currently, they are making mixed comments. St. Louis Fed President James Bullard backed further rate hikes to curb inflation. Yet, Atlanta Fed President Raphael Bostic expects only one increase in May. After that, he believes that the rate should be kept at high levels for quite a long time. So, traders need to make conclusions based on contradictory statements, as the blackout period starts on a Friday and it will last till May 3. For this reason, the speeches of Chicago Fed President Austin D. Colesby and the New York Fed President John Williams will be in the limelight this week. Moreover, the Budget Book will be released tonight and may also affect the stock market and the US dollar. While stock markets are gripped by uncertainty, the US dollar is gradually recovering amid growing yields of US government bonds. However, an increase in Treasury notes can hardly be called a bullish factor. The inversion between 3 months and 10-year Treasury yields totaled more than 160 points today, and such an inverted yield curve has not been seen since 1981. When longer-term bonds have a lower yield than short-term ones, it could be a sign of a looming recession. Therefore, the upside potential of the US dollar on Wednesday was limited. It fell to 101.80. Besides, the prospects of new rate hikes also exert pressure on the US dollar. So the US dollar index was rather volatile amid a mixed fundamental background. In the Asian session, the greenback was trading in the upward channel of 101.60 and 102 points. The risk of a global economic downturn are easing, and they have recently been the main driving force for the US dollar, so its decline from recent highs is likely to be steeper. Although the US dollar is weakening now, the dollar-yen pair kept rising in the morning. It reached the level of 134.8, steadily moving in the range of 133.9 and 134.9. As the traders are still buying the US dollar, the pair is moving further away from 134, and it may climb above the 3-week high of 134.75. Expectations of new rate hikes by the Fed are bolstering the yields of Treasury notes. They also revive demand for the US currency. However, these same prospects are fueling recession fears. It usually benefits safe haven currencies, including the Japanese yen. Geopolitical tensions between China and Taiwan are also impacting commodity currencies. Bulls are unable to regain the upper hand due to expectations of new rate increases by the Fed Reserve. Oil prices, which usually push commodity currencies higher, remained not stable today. On early Wednesday, the Aussie was mainly in the bearish corridor. However, the AUD USD pair managed to rise slightly to 0.6709. It's quite hard for the Australian dollar to maintain the winning streak on the previous day. If even made several attempts to enter the range of 0.6704 and 0.6743, and the Aussie also tried to climb amid a lower chance of a recession in Australia and relatively strong fresh economic reports, the overall hawkish tone of the April meeting minutes and the China's upbeat data could somewhat limit the fall of the Australian dollar. The New Zealand dollar started Wednesday morning with a drop. It was trading in the price corridor of 0.6184 and 0.6219. The Kiwi will hardly find support from economic macro stats and the central bank. Inflation in New Zealand is still high, as well as the interest rates. Therefore, its further trajectory will depend on the movements of the US dollar. It means that a downtrend looks more likely. At the end of the Asian session, the Kiwi dollar pair declined to 0.6190. And that's all for now. Please leave your comments down below and hit the subscribe button and keep close tabs on the market developments with us. See you soon!